But why are these silver stocks getting hit so hard when silver is $90 an ounce? None of this makes sense. Yes, gold and silver stocks have tripled along with the price of gold and silver, but their profits are going to go up a lot more than triple. These stocks should be much, much higher. The reason they're not is because Wall Street still doesn't understand what's going on. New record highs for both gold and silver. In fact, the records were set on Monday. We had a huge rally starting Sunday night into Monday. At one point, gold was up better than $120. Silver was up over $6. It was the biggest dollar rally in one day I've ever seen in gold. Now, percentage-wise, it wasn't a record, but dollar-wise, it was. Gold rose to a high of about 4,640, and silver was trading above $93 an ounce. And I'm going to give out the same advice now, and that is don't wait for Monday. In fact, this Monday is Martin Luther King Day. So if you're going to wait for regular trading to resume, you're waiting for Tuesday. Don't wait. I think we're going to have another huge move up on Sunday night, Monday, Tuesday. So to beat the herd or the crowd, I recommend that as soon as you are finished listening to this market wrap, you go right to Schiff Gold and buy more gold and silver. Now, silver's been a lot more volatile than gold all week. But the important point is that the volatility is taking place at these very high prices. And this is just another consolidation of this big breakout. So if you're thinking about looking for a big pullback to buy silver, think again. The opportunity to buy $50 silver is long gone. Right? And you're lucky if you could buy $70 silver, but I wouldn't even wait for that because I think the supplies of silver are going to start to run low and the premiums are going to really start to blow out so that even if silver goes down, the price of silver coins and bars may still go up. Same thing's going to happen now, except it's not a mortgage credit that is the problem. It is government credit. It is sovereign debt. It is the debt of the United States. It's not a mortgage crisis. It's a U.S. Treasury crisis. That's what's coming, and a U.S. dollar crisis. Gold and silver are your early warning signs. First it was gold, and now it's silver, and of course platinum, the whole precious metals complex is flashing that the dollar is in trouble, that the U.S. bond market is in trouble. Well, what happened with gold, what's happening now, I think, is forecasting a much bigger monetary crisis that may hit later in the year or maybe even next year, but in the dollar, in the bond market. So gold is reacting first, just like subprime reacted first in 2007. You saw the broader crisis hit a year later.
Peter Schiff warns don't wait until Tuesday. Buy gold and silver this weekend before another massive move. Gold hit $4,640. Silver $93 in biggest dollar rally ever. Silver premiums exploding as supply runs low. This is a U.S. Treasury crisis, not a mortgage crisis like 2007. Gold is the early warning, like subprime was.
And what I've been saying is that these sell-offs are irrelevant to the value of these gold mining companies. Gold could go to $3,000 and they'd still be cheap. So what difference does it make if it's $4,600 or $4,500 or $4,300? Doesn't make any difference at all. Gold stocks should be going up every day at this point, regardless of the short-term fluctuation in the price of gold. To me, it's just like 2007 when subprime blew up. That was the warning that the rest of the mortgage market and the financial system was going to follow. I knew the financial crisis I had been forecasting for years was a lot closer to a reality once I saw what happened to subprime. But the reason that Wall Street was oblivious, the reason that Ben Bernanke said subprime is contained, is because he didn't understand the problem in the economy, in the housing market, in the mortgage market. So from their perspective, it was no big deal what happened to subprime. I knew it was the tip of a huge iceberg. And I appreciated the warning because I understood what the warning was about. Same thing is happening now, right? The financial crisis didn't come until a year later. Subprime blew up in 07. Financial crisis happened later in 08. And in fact, in early 08, people still thought everything was great, right? Even though we were already in the Great Recession. They didn't know about it yet. I knew about it, but they didn't find out until the end of the year when they revised all of the economic data going back a year.
Inflation accelerating. PPI jumped to 3.5%. Fed still cutting rates. Japan bonds at 2.17% headed to 3%. Will pressure U.S. yields. Trump policies pushing world away from dollar. Mining stocks massively undervalued. Public still asleep. Wall Street doesn't understand. Window closing fast.
We got the official CPI numbers, came out on Tuesday. And the media initially hyped this up as if it was good news. Like, oh, see, inflation is going away, right? But here are the actual numbers. So the PPI, and these are December numbers. So the month increase in consumer prices was 0.3. The prior month was 0.2. So it got worse. And if you annualize 0.3, you're looking like 4% inflation. That's double the Fed's 2% target. The Fed is cutting rates. They're talking about rate cuts, and inflation is twice what they claim they want it to be. They should be hiking rates, not cutting rates. And how is this good? Now, if you look at the producer prices for the month, okay, the overall number was a little bit better than expected at 0.2. But the year-over-year increase in producer prices jumped from 2.7 to 3%. 3% year-over-year rise in producer prices. Much hotter than the 2.7, 0.3 hotter than they thought. I don't know if this is the super core or what it is, but it's the producer prices excluding food, energy, and trade services. That was up 3.5% year over year in November versus being up just 2.9% year over year in October. That is a big increase in year over year price increases in just 1 month. And the Fed is cutting rates, and they're talking about more rate cuts in the face of already high inflation going up. And again, as I mentioned on my last report, very few people seem to understand that gold companies also mine silver. It just reduces the cost of their gold. And now their costs are going to collapse because the silver byproduct that they're mining when they're looking for gold is now so valuable that it is dramatically reducing the cost of mining gold. Meanwhile, look at what's going on with yields in Japan. I've been warning about what was going to happen with the Japanese government bond market. I started really warning about it when rates for the 10-year Japanese government bond were about to break 0.5%, 50 basis points, because originally the Japanese government kind of drew a line in the sand and they wanted to defend 50 basis points. And I said they won't be able to do it. Rates are going a lot higher. And I predicted that we would get to 2% and that once we did, we could have a quick move to 3% and all hell could break loose. Right now, the yield on the 10-year Japanese government bond is 2.17%, right? And headed much, much higher. This is going to be a big problem, not just for Japan, but for the United States, because rising Japanese government bond yields are going to put a lot of pressure on U.S. government bond yields. And I talked about what happened over last weekend that helped fuel the weekend gold rally. And that was the announcement from Jerome Powell that he received a notice from the Justice Department that he is under criminal investigation for statements that he made to Congress about the renovation project of the Federal Reserve building in Washington. So I spoke at length about that, as well as the president's harebrained idea to cap credit card interest rates at 10%, and how this stuff, also the stuff that he's saying about Greenland. I mean, everything that Donald Trump is doing is pushing the world away from the dollar and into gold. I mean, he's not doing it intentionally, but the unintended consequence of the policies that he's pursuing are very bullish for gold and silver. Now, they're bearish for the dollar. The dollar hasn't cracked yet. The Treasury bond market hasn't cracked yet. That is coming, right? Gold and silver are the early warning. In fact, if you look at China's numbers, China's exports to the U.S. were down, I think, 20 or 30%. Yet they posted all-time record high trade surplus. How is that? They're selling less to America, but more to the whole world, right? So what they didn't sell to us, they sold to the Europeans. They sold to the South Americans. They sold to other Asian consumers. So our loss was their gain. Other consumers got what we could no longer afford. And China didn't miss a beat. In fact, the Chinese yuan was up about 5% last year, closed the year, 2.5-year high, and it's already rising again. And so China is winning the trade war. And in fact, the fact that so few investors are buying, again, it's still relatively quiet. Yes, business has picked up a little bit at Schiff Gold, but it's not like the phones are ringing off the hook. It's not like our website's going down because of all the traffic. It really is business as usual, right? Because the public is still asleep. And while they are, before they wake up and before Wall Street wakes up, make sure you get, all the gold and silver that you can. And what Trump is doing is playing a big role in that. But we also have some news that came out this week that I didn't have on Monday when I did my main podcast. So I want to get into this news that is also bullish for gold, and that is inflation. But the consensus for the core month-over-month gain was 0.3. And instead, we rose by 0.2. That's what Wall Street was celebrating. That's nothing. I mean, it was 0.2 the prior month, so no improvement, right? And year over year, they were looking for 2.7. Again, this is the core, not the headline. They were looking for 2.7, and we got 2.6, which was the same as we got the month before. But so what? It was 0.1 lower. It's meaningless, right? And remember, the Fed wants this to be 2%. We're not even close to 2%. But what was worse than the CPI was the PPI that came out the following day. Now, the PPI, I think, is more important than the CPI because it's forward-looking, right? The PPI is producer prices. And producers generally feel the pinch of inflation first, right? Because they're buying at the wholesale level. If you own gold and silver, if that's the money you save, then everything is going to be cheaper. The price of everything that you need to buy will be less expensive if you have gold and silver to pay for it. I mean, that's one of the reasons that I'm setting up T-Gold because I want to enable people to have a currency, have money that will buy more over time, not less, right? You don't want your savings to erode in value before you have a chance to spend it. You'd like your savings to grow in value so that when you go to buy something, you can actually buy more than when you set the money aside. That's how money is supposed to work. The longer you wait to spend it, the more you're supposed to get, right? That's capitalism. That's how it works. It's socialism. It's central banking that has perverted sound money and given us constant inflation. Bye for now and enjoy your holiday weekend.